Your biggest enemy in trading isn't the market, it's your own emotions. Why do traders with great strategies still lose money? And what mindset shift separates consistently profitable traders from everyone else? In this video, I'll break down the core lessons from The Disciplined Trader, including how to control fear, greed, and impulsive decisions so you can trade with clarity and confidence. Ever exited a winning trade too early or held on to a losing one for too long? You're not alone, and this book explains exactly why that happens. By the end, you'll understand how to build true trading discipline and how to apply it to become a calmer, more consistent, and more profitable trader. Somewhere in the world right now, a trader is staring at a screen, heart racing, watching a price move up and down by a few meaningless ticks. Every movement feels personal. Every candle feels like judgment. Every loss feels like proof of failure. And every win feels like relief. Not confidence, but relief that pain has stopped, at least for now. This is where almost every trading journey begins. Not with charts, not with strategies, not with indicators. It begins inside the mind, inside fear, hope, impatience, and expectation. Most traders believe the market is the problem. They believe the market is unpredictable, unfair, manipulated, or hostile. They believe success is about finding the right system, the right mentor, the right secret. But Mark Douglas begins The Disciplined Trader with a shocking reversal of perspective. The market is neutral. It is not against you. It is not for you. It simply is. The market does not know you exist. It does not care about your opinions. It does not respond to your needs. And that is exactly why it becomes such a perfect psychological mirror. The market reflects back whatever you bring to it. Fear becomes hesitation. Greed becomes overexposure. Hope becomes denial. Ego becomes stubbornness. And because money is involved, the emotional amplification is intense. Every belief you carry about risk, control, self-worth, success, and failure becomes visible in your trading results. This is why two people can look at the same chart and experience completely different realities. One feels opportunity, the other feels danger. One sees clarity, the other sees chaos. The chart did not change. The market did not change. The only thing that changed was the internal state of the observer. Mark Douglas explains that trading is not a test of intelligence. It is a test of beliefs. And beliefs shape behavior far more powerfully than logic ever will. A trader may know they should cut losses quickly, but if they believe losses mean failure, they will hesitate. A trader may know they should let winners run, but if they believe success is fragile, they will exit early. A trader may know the market is uncertain, but if they crave control, they will overanalyze and overtrade. Knowledge without psychological alignment becomes useless. It sits in the mind while emotion drives behavior. This is why most traders experience a painful cycle. They learn, they feel confident, they enter the market, emotion takes over. They break rules, they lose money, they retreat. Then they repeat the cycle again with a new strategy, a new indicator, or a new teacher, never realizing the problem was never external, it was internal. The market is not designed to be comfortable, it is designed to be uncertain. And uncertainty is the environment where the human mind struggles the most. We are wired to seek safety, predictability, and control. The market offers none of these. It offers probability instead of certainty. It offers randomness instead of control. And unless you learn to accept that emotionally, not just intellectually, trading becomes a battlefield inside your own head. This is why discipline is not about forcing yourself to follow rules. Discipline is about building a mindset where following rules feels natural, where uncertainty feels acceptable, where losses feel normal, where outcomes do not define identity. The disciplined trader is not fearless. They are not emotionless. They are not detached. They are simply aligned. Aligned with uncertainty, aligned with probability, aligned with process instead of outcome. They do not need the market to behave a certain way to feel okay. They do not need to be right to feel valuable. They do not need to win every trade to feel confident. Their stability comes from internal consistency, not external results. This is the foundation of everything that follows. Before strategy, before risk management, before execution, there is mindset. And mindset determines whether every tool becomes a weapon or a wound. In the chapters ahead, you will begin to see why discipline is not a personality trait. It is a structure. Why consistency is not talent. It is alignment. And why freedom in trading does not come from controlling the market, but from no longer needing to. Because the moment you stop fighting uncertainty, uncertainty stops controlling you. And that is where the real journey begins. In the next chapter, we step into the most dangerous illusion traders carry, the belief that they need certainty to succeed, and why letting go of that need is the first true act of discipline. It is alignment. And why freedom in trading does not come from controlling the market, but from no longer needing to. Because the moment you stop fighting uncertainty, uncertainty stops controlling you. And that is where the real journey begins. In the next chapter, we step into the most dangerous illusion traders carry, the belief that they need certainty to succeed, and why letting go of that need is the first true act of discipline. Every trader begins with the same hunger, the hunger to know, to predict, to be certain, to feel safe before acting. It feels responsible. It feels intelligent. It feels necessary. And yet this need for certainty is the single most destructive force in trading psychology. It is the root of hesitation, overanalysis, impulsive exits, and emotional collapse. Mark Douglas teaches something that feels almost offensive at first. You do not need to know what will happen next to make money in the market. In fact, the more you believe you need to know, the more you will sabotage yourself trying to find certainty in a system that cannot provide it. Markets are not deterministic, they are probabilistic. Every setup is only an edge, not a guarantee. Every trade is just one of many outcomes in a long series. But the human mind hates this. The mind wants control, it wants prediction, it wants assurance. And when it doesn't get those things, it panics. That panic does not always look like fear. Sometimes it looks like overconfidence. Sometimes it looks like urgency. Sometimes it looks like endless research. But underneath every form is the same desire, to feel safe before acting. The disciplined trader understands something different. They understand that safety does not come from prediction. It comes from risk control and process trust. They stop asking, will this trade work? And start asking, does this trade follow my rules? That single shift changes everything. Consider a trader watching a chart on a quiet afternoon. A setup appears that fits their system perfectly, but doubt creeps in. What if this time is different? What if the news changes things? What if the market reverses? So the trader waits. The price moves without them. Regret appears. Now they feel pressure. They chase the move. They enter late. The market pulls back. They panic and exit. The setup eventually works without them. Nothing was wrong with the system. Nothing was wrong with the market. Everything was wrong with the need for certainty. The need to be right turns trading into an emotional contest. It makes every outcome personal. A win becomes validation. A loss becomes shame. And when identity becomes attached to results, discipline collapses. Traders stop following rules and start protecting their self-image. This is why so many traders hold losers too long. Closing a losing trade feels like admitting failure. It feels like saying, I was wrong. And the ego resists that. But the disciplined trader has already accepted being wrong as part of the game. They do not equate wrongness with weakness. They equate refusal to adapt with danger. Here is one of the most liberating realizations in trading. You can be wrong more than half the time, and still make a lot of money. Once you understand this deeply, the need to be right loses its grip. You stop chasing perfection and start chasing consistency. Think of a professional baseball player. They fail most of the time. They miss the ball more often than they hit it. Yet they are considered elite because when they do connect, they do it with power and precision. Trading works the same way. You are not paid for being right often. You are paid for managing outcomes well. The disciplined trader makes peace with uncertainty. They stop fighting it. They stop trying to eliminate it. They accept it as the environment they operate in. This acceptance does not make them passive. It makes them powerful. Because once you stop needing the market to behave a certain way, you can respond to it calmly instead of reacting emotionally. Uncertainty is not the enemy. Attachment is. Attachment to outcomes. Attachment to being right. Attachment to control. When those attachments dissolve, clarity appears. You enter because the rules say enter. You exit because the rules say exit. You risk because the plan allows it. You stop because the plan demands it. There is no negotiation. There is no argument. There is no drama. There is only execution. This is what discipline truly is. Not rigid control, but emotional neutrality. Not suppression, but acceptance. Not force, but alignment. Clarity appears. You enter because the rules say enter. You exit because the rules say exit. You risk because the plan allows it. You stop because the plan demands it. There is no negotiation. There is no argument. There is no drama. There is only execution. This is what discipline truly is. Not rigid control, but emotional neutrality. Not suppression, but acceptance. Not force, but alignment. In the next chapter, we will explore how beliefs shape perception and why two traders looking at the same chart can experience completely different emotional realities, and how the disciplined trader rewires their beliefs to create consistency instead of chaos. Two traders sit in front of the same screen, watching the same market, looking at the same price movement. One feels calm, the other feels anxious. One sees opportunity, the other sees danger. One executes cleanly, the other hesitates, rushes, or freezes. The chart is identical. The difference is not in the data, it is in the beliefs filtering that data. Mark Douglas emphasizes that perception is not neutral. The human mind does not simply observe reality, it interprets it. And that interpretation is shaped by beliefs formed long before a trader ever opens a chart. Beliefs about risk, beliefs about loss, beliefs about control, beliefs about worth, beliefs about success. Every one of these silently influences what feels safe, what feels dangerous, and what feels urgent. This is why technical knowledge alone never creates consistency. You can know every pattern, every indicator, every statistic, and still fail emotionally. Because the mind is not responding to logic, it is responding to meaning. And meaning is created by belief. A trader who believes losses are unacceptable will experience every drawdown as a threat. They will avoid exits. They will move stops. They will hope instead of act. A trader who believes losses are normal will experience the same drawdown as information. They will adjust calmly. They will follow their plan. The market does not change between those two traders. Only the internal narrative changes. This is what makes trading such a powerful psychological arena. The market becomes a mirror that reflects unconscious beliefs back into behavior. If you believe the market is dangerous, you will trade defensively. If you believe the market is random, you will trade carelessly. If you believe the market can be mastered, you will over-control. But if you believe the market is probabilistic and neutral, you will trade with structure and calm. Beliefs are not thoughts you consciously choose. They are conclusions formed over time from experience, emotion, and interpretation. A painful loss early in a trading career can create a deep belief that the market is hostile. A big win can create a belief that you are talented. Both beliefs distort perception. Both create emotional attachment. The disciplined trader does something very unusual. They actively examine their beliefs. They question them. They replace those that sabotage them with ones that support clarity. They replace "losses mean I'm bad at this" with "losses are the cost of participation." They replace "I need to be right" with "I need to follow my rules." They replace "I must avoid pain" with "I must manage risk." This belief work is not philosophical, it is practical, because when beliefs change, emotional reactions change. And when emotional reactions change, behavior changes. This is why discipline is not something you force on top of emotional chaos. It is something that emerges naturally when internal conflict dissolves. When beliefs align with reality, resistance disappears. Think about how this shows up in everyday trading. A disciplined trader sees a losing streak and remains calm. They know variance exists. They know their edge plays out over many trades. An undisciplined trader sees the same streak and panics. They change systems. They increase risk. They seek certainty. Same data, different belief system, different behavior. Beliefs are invisible, but they are powerful. They decide whether a trader feels threatened or confident, patient or impatient, focused or distracted. The chart is not neutral to the mind. It becomes a canvas onto which beliefs are projected. The disciplined trader learns to see the chart as information, not judgment. They stop asking what the market means about them. They only ask what the market is doing. This separation of identity from outcome is what creates emotional stability. Once identity is removed from results, fear weakens, ego quiets, impulses soften. The trader becomes less reactive and more responsive. This is why the journey of becoming disciplined is not about learning more. It is about unlearning what distorts perception. It is about removing beliefs that turn neutral events into emotional threats. When that happens, something remarkable occurs. The market stops feeling like a battlefield. It starts feeling like a flow of information. Decisions become simpler, execution becomes smoother, and consistency becomes possible. In the next chapter, we will explore how emotions arise not from events themselves, but from the meaning we attach to them, and how the disciplined trader learns to experience emotion without being controlled by it. Every trader feels emotion: fear, excitement, disappointment, relief, hope. They all arise naturally when money and uncertainty intersect. The disciplined trader is not someone who feels less. They are someone who lets feelings exist without letting them rule behavior. This distinction is subtle, powerful, and often misunderstood. Most people believe emotional discipline means suppressing emotion, staying cold, staying detached, staying numb. But suppression only drives emotion underground, where it quietly shapes behavior without awareness. True discipline is not emotional suppression. It is emotional neutrality. It is the ability to experience feeling without identifying with it. Emotion is information, but it is not instruction. Fear tells you that something feels uncertain. It does not tell you what to do. Excitement tells you something feels promising. It does not tell you to increase risk. Disappointment tells you expectations were violated. It does not tell you to revenge trade. Undisciplined traders treat emotion as a command. Disciplined traders treat emotion as a signal, something to notice, not obey. Consider a trader watching a position move against them. Anxiety rises. The mind whispers, "Get out." Another trader watching the same movement feels the same anxiety, but they do nothing. Why? Because their plan defines exits, not their emotions. The anxiety is allowed to exist, but it is not allowed to decide. This is emotional neutrality. It is the ability to feel fully while acting logically, to notice fear without running from it, to notice excitement without chasing it, to notice disappointment without trying to escape it through impulsive action. The reason this is so difficult is because the human nervous system evolved to treat uncertainty as danger. The market constantly produces uncertainty, so the nervous system stays on high alert. This creates chronic emotional tension for traders who do not develop neutrality. Every price movement feels like a potential threat. Every fluctuation feels meaningful. The disciplined trader rewires this response through repetition and structure. They repeatedly expose themselves to uncertainty while remaining calm. Over time, the nervous system learns that uncertainty is not dangerous when risk is controlled. The emotional reaction softens. This is why discipline is not built through thinking alone. It is built through experience. Calm execution under uncertainty trains the nervous system to relax. Once the nervous system relaxes, clarity increases. There is a powerful psychological concept here. Your mind learns safety not through logic, but through survival. When you experience uncertainty and nothing bad happens because you followed your rules, your system learns that uncertainty is tolerable. Over time, what once felt threatening becomes normal. This is how fear loses its power, not by being fought, but by being made irrelevant. Emotional neutrality does not mean you stop caring. It means you stop attaching meaning to every outcome. A win does not make you superior. A loss does not make you inferior. They are simply outcomes within a probabilistic system. When traders attach self-worth to results, emotion becomes explosive. A loss becomes a threat to identity. A win becomes a drug. The trader becomes emotionally dependent on the market for validation. That dependence destroys discipline. Neutrality removes that dependency. The trader no longer needs the market to feel good about themselves. They no longer need to be right. They no longer need excitement. They only need alignment with their process. This creates freedom. Freedom to enter without fear. Freedom to exit without regret. Freedom to wait without impatience. Freedom to lose without collapse. And freedom is the true edge. The disciplined trader is not chasing profit. They are protecting process, and profit emerges as a byproduct of that protection. Most traders think discipline is something you summon, a moment of strength, a burst of control, a heroic act of willpower when emotions rise. And when they fail to maintain that control, they blame themselves. They say they are weak, inconsistent, or not cut out for trading. This belief is wrong and damaging. Discipline is not a personality trait. It is not a character flaw, and it is not something you magically develop by trying harder. Discipline is a structure. It is a system you build that makes the right behavior easier than the wrong one. Undisciplined traders live in negotiation. They negotiate with fear. They negotiate with hope. They negotiate with boredom. Every decision becomes a battle between logic and emotion almost always wins. Disciplined traders eliminate negotiation. They do not ask themselves whether to follow rules. They build environments where rules are followed automatically. Think about how pilots fly planes. They do not rely on memory when something goes wrong. They rely on checklists. They rely on procedure. They rely on structure. This is not because they are weak. It is because they understand that under stress, human decision-making deteriorates. Trading is no different. The disciplined trader designs systems that operate even when emotions are loud. Entry criteria are defined in advance. Exit rules are non-negotiable. Risk is calculated before trades are placed. Journals are reviewed consistently. These systems act as external discipline, replacing internal struggle with mechanical clarity. When systems are absent, traders rely on feelings. When systems exist, feelings become irrelevant. This is why discipline feels difficult to those without structure and effortless to those with it. The difference is not motivation, it is design. The disciplined trader does not wake up and ask, "How do I stay disciplined today?" They wake up and follow a routine that already contains discipline. Over time, this routine becomes identity. There is a profound psychological shift here. When discipline is systematized, you stop judging yourself emotionally. A mistake becomes feedback. A deviation becomes data. You are no longer fighting yourself. You are refining a process. This removes shame, and shame is one of the biggest destroyers of consistency. When traders feel ashamed of mistakes, they avoid reviewing them. When they avoid reviewing them, they repeat them. When mistakes are treated neutrally, improvement becomes natural. This is why the disciplined trader embraces structure not as restriction, but as freedom. Structure removes uncertainty about what to do. It removes emotional debate. It creates a calm operating environment in a chaotic system. This is also why disciplined traders often appear boring. They do not chase excitement. They do not seek adrenaline. They do not look for constant action. They wait. They execute. They stop. They repeat. Boredom is a sign that the system is working. When trading feels boring, emotion is no longer driving behavior. And when emotion is no longer driving behavior, consistency becomes possible. This chapter is about replacing effort with design, replacing struggle with systems, replacing force with alignment. The undisciplined trader asks one question again and again, even if they never say it out loud. Will this trade work? The disciplined trader asks a different question. Does this trade belong? That difference may seem subtle, but it changes everything. The first question is about certainty. The second is about probability. The first invites emotion. The second invites structure. Most people are wired to think in absolutes, right or wrong, win or lose, success or failure. This binary mindset makes sense in daily life, but in trading, it is destructive. Because the market does not operate in absolutes. It operates in distributions, in ranges, in tendencies, in probabilities. When a trader thinks in absolutes, every trade becomes a verdict. A loss becomes failure. A win becomes proof. The emotional weight becomes enormous. But when a trader thinks in probabilities, each trade becomes just one data point in a much larger series. The emotional charge dissolves. This is why Mark Douglas emphasizes probabilistic thinking as the foundation of discipline. Once you internalize that you cannot know the outcome of any single trade, the need to control disappears. You stop trying to predict. You stop trying to be right. You start executing edges instead of chasing certainty. An edge does not promise profit on every trade. It promises favorable outcomes over many trades. That is a very different psychological experience. Imagine flipping a biased coin that lands on heads slightly more often than tails. You do not expect heads every time. You expect a long-term advantage. If the first flip is tails, you are not disappointed. You are not angry. You are not shaken. You know the system works over time. This is how disciplined traders experience losses. Not as failure, but as variance. Not as mistakes, but as expected outcomes within a probabilistic system. This mindset frees the trader from emotional attachment to individual results. It allows losses to occur without triggering panic. It allows wins to occur without triggering greed. It creates emotional stability in an environment that constantly tries to destabilize you. This is why many traders fail even with good systems. They understand the logic, but not the psychology. They know the probabilities intellectually, but still feel emotionally attached to outcomes. And until that attachment dissolves, discipline remains fragile. Thinking probabilistically also changes how traders interpret streaks. A series of losses does not mean the system is broken. A series of wins does not mean the trader is brilliant. Both are part of distribution. Both are temporary. This prevents the two most dangerous emotional traps in trading: panic after losses and arrogance after wins. Both destroy discipline. The disciplined trader remains centered in both. This mindset also creates patience. If you know your edge works over time, you do not rush. You do not chase. You do not force trades. You wait for alignment. You trust the process. You let the math play out. This is what creates calm. Not certainty, but trust. Trust in your system. Trust in your risk management. Trust in your discipline. Probabilistic thinking does not make trading easier. It makes trading clearer. And clarity is what allows discipline to survive under pressure. At some point in every trader's journey, a quiet realization emerges. The market cannot be controlled. It cannot be predicted. It cannot be forced. And yet, most traders spend years trying to do exactly that. They try to control outcomes. They try to control risk emotionally instead of structurally. They try to control uncertainty instead of accepting it. This struggle is exhausting and unnecessary. The disciplined trader does something that feels counterintuitive at first. They surrender control. Not control over their behavior, but control over outcomes. They accept that the market will do what it does. They accept that losses will happen. They accept that randomness is not an enemy, but a condition of the environment. This surrender is not weakness, it is strength. The moment you stop trying to control the market, you gain control over yourself. You stop reacting to every movement. You stop interpreting every fluctuation as meaningful. You stop needing validation from wins and protection from losses. You become emotionally independent from the screen. This is the final psychological transition from amateur to professional. The undisciplined trader wants certainty. The disciplined trader accepts probability. The undisciplined trader wants control. The disciplined trader builds structure and releases outcome attachment. This shift feels uncomfortable because humans are wired to seek predictability. But once you experience the freedom that comes from surrender, you never want to go back. Trading stops being a battle and starts being a practice. You execute, you observe, you adjust, you repeat. There is no drama, there is no narrative, there is no story about what the market should do. There is only what it is doing and how you respond. This is what allows consistency to last. Not force, not motivation, but acceptance. Acceptance that uncertainty is permanent. Acceptance that losses are inevitable. Acceptance that perfection is impossible. And in that acceptance, discipline becomes effortless. You no longer fight yourself. You no longer fight the market. You no longer fight reality. You align with it. This alignment creates a calm, focused state where execution flows naturally. This is where the best traders operate, not in excitement, not in fear, but in quiet clarity. The undisciplined trader defends their ideas. The disciplined trader refines them. This distinction may seem small, but it marks the difference between stagnation and mastery. When traders attach identity to their strategies, they resist feedback. When traders attach identity to their process, they welcome it. Adaptability is not instability, it is intelligence in motion. Markets change, volatility shifts, trends evolve, correlations break. What worked last year may stop working this year. The disciplined trader does not take this personally, they expect it. They design their approach to adapt without emotional disruption. This is why rigid traders struggle. They cling to familiar systems because familiarity feels safe. But safety built on outdated assumptions is fragile. When conditions shift, fear rises and discipline collapses. The trader becomes defensive instead of responsive. The disciplined trader remains curious, not in a frantic way, but in a measured, reflective way. They review performance calmly. They study patterns of success and failure. They adjust position sizing. They refine criteria. They evolve. This evolution is not constant change. It is slow refinement. It is improvement through awareness, not reinvention through frustration. There is a humility in disciplined trading, a recognition that no system is perfect, No edge is permanent, and no trader is finished learning. This humility protects against arrogance after wins and despair after losses. It creates emotional resilience. Mistakes become teachers, not threats. Drawdowns become data, not disasters. Change becomes normal, not frightening. This mindset allows the disciplined trader to grow with the market instead of being crushed by it. They do not resist change, they integrate it. In this way, discipline becomes a living practice, not a rigid rulebook. It breathes with the market. It responds without panic. It evolves without ego. The early phase of trading is often intense. Late nights, endless chart watching, emotional highs and lows, obsession disguised as dedication. Many traders burn brightly and burn out just as quickly. The disciplined trader chooses a different path, a slower one, a quieter one, a sustainable one. Sustainability is not a compromise, it is a strategy. A trader who exhausts themselves cannot remain disciplined. Fatigue erodes patience. Stress weakens clarity. Burnout destroys consistency. The market does not care how hard you try. It only responds to how well you execute. This is why the disciplined trader designs a life around trading instead of letting trading dominate life. They build routines that support clarity. They protect sleep. They limit screen time. They schedule reviews instead of constant monitoring. They create separation between trading and identity. This separation is essential. When trading becomes your entire emotional world, every outcome becomes magnified. Losses feel catastrophic. Wins feel euphoric. Stability disappears. But when trading is one part of a balanced life, emotions remain proportionate. Perspective remains intact. This is not weakness, it is professionalism. The disciplined trader understands that clarity is a resource, and like any resource, it can be depleted, so they protect it. They reduce unnecessary stimulation. They avoid overexposure to news. They limit emotional inputs. They simplify decisions. This creates a calm operating environment, a mental space where discipline can thrive. Trading becomes a practice, not an obsession, a craft, not a compulsion. This is how traders last decades instead of months. This is how they remain clear in volatility. This is how they avoid emotional exhaustion. Sustainability also means financial sustainability. Risk is sized to survive. Losses are limited to tolerable levels. No single trade threatens survival. No streak threatens identity. The trader is built to endure. Because in trading, survival is success. The goal is not excitement. The goal is not adrenaline. The goal is not constant action. The goal is consistency over time. This chapter marks the transition from trader as seeker to trader as steward, from chasing outcomes to maintaining alignment, from intensity to maturity. At the beginning of this journey, trading may have felt like a way out, a way to escape limits, a way to prove something, a way to feel powerful, successful, or free. But as discipline develops, something subtle changes. Trading stops being about what you want from the market and starts being about who you become through the process. The disciplined trader is not defined by profits. They are defined by stability. They are not defined by prediction. They are defined by alignment. They no longer need the market to validate them, excite them, or rescue them. They approach the market as a place to apply skill, not extract identity. This is why the disciplined trader appears calm when others panic, why they appear patient when others chase, why they appear humble when others boast. They are no longer trying to get something from the market. They are simply participating in it with clarity and respect. This shift changes everything. When you no longer need the market to feel confident, you stop overtrading. When you no longer need the market to feel safe, you stop forcing certainty. When you no longer need the market to feel important, you stop seeking excitement. You trade because the setup exists. You exit because the plan requires it. You rest because clarity matters. There is no drama. There is no urgency. There is no inner conflict. This is what freedom in trading looks like. Not wealth alone, but peace. Not domination, but harmony. Not intensity, but clarity. The disciplined trader has learned the most important skill of all, self-mastery. And self-mastery extends far beyond the market. It touches every part of life: emotional regulation, decision-making, patience, perspective, responsibility. Trading becomes a training ground for wisdom, a mirror for growth, a discipline for the mind. This is why some people say trading is spiritual, not because of mysticism, but because it strips away illusion. It reveals attachment. It exposes fear. It teaches surrender. It forces honesty. And through that process, the trader becomes lighter, calmer, clearer. The market no longer feels hostile. It no longer feels exciting. It no longer feels personal. It simply feels like a flow of information, and you have learned how to listen without reacting. This is what Mark Douglas meant when he wrote about discipline. Not control, not force, but internal freedom. Freedom from fear, freedom from impulse, freedom from ego. And with that freedom, trading becomes sustainable, peaceful, and powerful. Not because you conquered the market, but because you stopped needing to. Now you know how being disciplined can take your trading journey to the next level. But what if I tell you, knowing how to be disciplined in trading will not guarantee success? Trading involves understanding the basics of the stock market to support your trading decisions. To get a complete understanding of the stock market and leverage this knowledge for your trading journey, click on the video popping up on the screen.